the first thing they see.
Exactly. Cool.
Okay.
Welcome, everybody. Welcome to this new show. Michael and I, we like to discuss about finance and politics and whatever else. So, yeah, we're just here to talk about Robinhood and what's been happening and what we think for the future. Is there anything you want to add, Michael?
Yeah, sure. So I guess just when it comes to the introduction of the show, it's with the idea of bringing some method into the madness of all that's going on, as now it pertains to obviously GameStop, Wall Street bets, a lot of the key phrases that you've been hearing in the news, multiple hours a day, to be honest. And so what we're going to do, first of all, is just give a quick summary of what happened for the sake of it, give an outline of the few topics that we're going to be talking about, and then we'll really start discussing, showcasing some videos, tweets, a bit of analysis here and there, just to kind of give you an idea of what's going on and explain the mechanics behind it. Because I guess financial literacy now more than ever is, it's not just important to get a grip of, but it's very imperative that people understand this with just the mass financialization of wealth that we have and the importance that the financial system plays around us, especially as like an economics student. I do believe that this kind of knowledge is important for other people to possess. Not only that, without kind of giving you a whole politician's speech on the importance of it, I'm just going to get stuck into it. So what's been happening essentially is we witnessed a short squeeze in the stock market when it came to GameStop and a few other heavily shorted stocks. And who shorted these stocks? There were a few hedge funds which had very large short positions on stocks like GameStop, AMC, I think BlackBerry. There was a few others, but those, GameStop especially, had the majority of the publicity. And so essentially some Redditors, a bunch of people, maybe not just them, potentially other hedge fund players, who knows, essentially initiated a short squeeze, forcing the hedge fund's arm in this kind of through this tactic and making a lot of money in the process. This resulted in a lot of backlash when it came to hedge funds bailing each other out or big shark investors. And then also Robinhood, actually, amongst other brokers, halting some of the trading, and not just halting trading, but stopping the buying of certain securities. So it wasn't a halt of operations. It was a targeted stoppage of the purchase of securities. People were very mad about that. It became an us versus them, eat the rich type of scenario. And people are fighting back. People in terms of like the little guy, not so little subreddit of Wall Street bets, they're purchasing more call options. They're increasing the buying pressure. And now politicians, everyone's talking about it. And with Sunday being now, we have the next week to look forward to in terms of what the hell is going to happen. So that's what's been happening. We're going to talk about what's going to happen later on. But for now, I guess we can start talking about the hedge funds initially shorting and talk about the mechanics of shorting, the naked shorts that they've initiated potentially as well, or they had initiated, how Wall Street bets came into this. Then, obviously, we'll talk about the first big media attention in terms of CNBC and all other news networks questioning the Robinhood CEO, questioning even some Redditors went on. I think it was Yahoo Finance. They talked about their opinions. Then the kind of core topics which we'll discuss is Robinhood and their trading halt, as I said. And then we'll go on the topic of amateur investors and unsophisticated investors. That's something that's been thrown around a lot. Redditors have been getting accused of being unsophisticated, idiots, this, that, and the other. They don't know what they're doing, and therefore us, the regulators, us hedge funds, we need to protect them. Us brokers need to protect them, whatever that is, in whatever form that comes into being. So I guess in that case, I'll just start talking about the hedge funds short specifically. Marco, I can't hear you. I don't know if that's going to be the same on the show.
Yeah.
But, okay, now I get...
Okay, perfect. Yeah. Headphones are definitely broken then. Because I was on a call this morning and the guy I was speaking with said the same. So, okay. I need to throw them.
Fair enough. That makes sense. Yeah, go ahead.
Yeah, no, I was going to say, let's maybe introduce, as you said, talk about what shorting stock is and put some context to it, like the GameStop, obviously we all know, is quite an old company. They used to sell brick and mortar, so they would have shops where they sell products. And so the general understanding was that for GameStop, it would probably go out of business. People know it'd be a bit like Blockbuster, and they thought it would go out of business. So what happened was all these hedge funds, they try and make as much money as possible, which is normal. And what they were doing on the market is they were essentially betting that the share price of GameStop would go down. Now they've actually bet so much on this and put the share price so far down that somebody on Reddit called it deep fucking value decided to look at the accounts and saw that actually this company was worth a lot more. And so then this guy on Reddit, he started investing in GameStop and essentially created a whole movement. And now a lot of people are buying into the company and raising the share price. And what happens is when you bet against a company for a share price of a company, if the share price goes up and you bet against it, then you have to make up for that loss. And the price has gone so far up and it's risen so much and so many people have been buying and raising the price that this hedge fund had to be bailed out. So that's essentially what's been happening.
Yeah, no, that makes sense. In short, that's the whole situation. And so, the thing with the short squeeze, which is what the Wall Street Bets has been doing, maybe alongside other investors, has been around ever since short positions have been and short players. The interest in this scenario comes essentially with the extent to which this stock was shorted. And so, for example, we have a publicly available float of shares, and the short interest showcases to you how much of the publicly available float in terms of the stocks is in a short position, right? So, for example, 50% short interest means that half of the stocks on the market are in a short position. In other words, by a short, we mean the company selling the shares to buy it back at a future date. And the way they sell these shares is that initially they usually borrow the shares from someone. They sell it on the market. If the price goes down, they buy the same amount of shares for a cheaper price. They keep the profit and they give the shares back. What happened here, and what Deep Fucking Value also talked about, is that in some of the cases with GameStop, the short interest exceeded 100%. So there was short positions bigger than the publicly available stocks of the firm. That's an interesting mechanic, and one might ask, how does that make sense? How can you sell more shares than there are in the market, right? This brings the topic of naked shorts, and that is selling shares that you don't have. As far as I know, that is illegal, and even it's kind of hard to kind of wrap your head around it. How do you sell a stock that's not there? Maybe this is something to do with the contracts, but nevertheless, Deep Fucking Value, even I think in July 2020, and around the time, he posted a video saying, okay, these hedge funds are shorting the GameStop at $4 after it had been falling. And he said that he started buying call options, expecting the price to go up, because for it to go down any further from his point of view, something catastrophic would have to happen. And basically now a lot of people agreed. They agreed with the due diligence, whatever the extent to which whatever that was, and they started buying into it. Not only with stock purchases, but in call purchases. So buying call options, that means essentially buying a contract that allows you to purchase that stock at a future date for a price set today, right? So the price set today, if the price goes up a lot, that contract is worth a lot. And Deep Fucking Value, even on Reddit, has been posting monthly updates of his positions for about a year and a half now. It's been a crazy journey. It's interesting to look at, but nevertheless, yeah, that was kind of the scenario. It became the idea that, okay, this GameStop stock is shorted so much more than what is perceivable. Like to some people, this was absurd, and they thought that, okay, hedge funds overstepped their mark. They went too greedy. They just kept shorting and shorting. They thought it was sure money, but well, clearly it's very not much so. Yeah.
Maybe let's take it a step forward and have a look at what's been happening with after that. So we've had all these people who thought that the price would go up, and they've almost put this hedge fund out of business. And then what happened? What was the market reaction after, and what happened? Why was there such a big outcry with Robinhood? And what happened there? Why weren't people allowed to trade anymore on the Robinhood app and try and buy more shares?
Yeah. So just before we hop into that, it was specifically Melvin Capital and I think Citron Research, which were the two initial hedge funds which were circling around the news in terms of the cost that they're suffering to this. And so Melvin Capital got partially bailed out, or did get bailed out, by Steve Cohen and Ken Griffin. So the former is from Point 72, and he's quite a infamous hedge fund manager, investor. There's a book name, if you don't know him, there's a book written about him and his previous operations called The Black Edge or Black Edge, and it's about insider trading. So it tells you a lot about his character and the way that this industry operates to a certain extent. And Ken Griffin is the CEO, I believe, of Citadel, which is also one of, if not the biggest market maker in America when it comes to actually executing the orders, executing order flow, right? And so these two invested or bailed out Melvin Capital, and obviously were thereby, because of shared interests initially as friends or as whatever in the same social circle, they bailed them out, and therefore it shows that there's some exposure that they have to this, and this exposure comes from obviously as well Robinhood, who is directing the order flow of the buy orders from these investors into Citadel, which then execute the orders and will suffer from, essentially. And so what happened then is that Robinhood came out with the announcement that they're actually stopping trading in, I think, 12 or 13 securities. Now, the total amount of securities might have been a red herring to what they were really targeting in terms of that being GameStop, and specifically GameStop purchases, because you could still sell the stock, you couldn't buy the stock. So what that happens, what that causes is that you limit the buy orders that are coming into the market maker, but you're but you're still permitting the sell orders, right? And so essentially, the hedge funds, the Robinhood as well, the brokers, these institutions were crying wolf in terms of calling what Wall Street Bets is doing and whoever else is behind this short squeeze market manipulation. But the great hypocrisy in all of this is what then Robinhood exactly reacted with it alongside some other brokers, and that is stopping the halt of trading when it came to certain securities. Specifically GameStop, because remember, GameStop, I think, trades on the New York Stock Exchange alongside these other stocks. The New York Stock Exchange was still operating fine. You could still go and buy these stocks. Like myself, if I'm not a Robinhood, I could log into another broker, go into the New York Stock Exchange and buy these securities. But whoever was in Robinhood could not. And so when the Robinhood CEO, for example, announced that he is there to protect his clients, his customers, this, that, and the other, he is doing a great disservice to whoever has GameStop in their portfolio. Because
let's have a look at that video, so then we can jump in and have a look.
Yeah.
By the way, thank you to whoever's watching. Welcome. If you have any questions, just post them. If you just bring the link up now. Essentially, what we're trying to do here is we're having a look at a few different areas and just trying to see what happened over the past week, and then what impact this has. Because essentially what's happened is that one of the brokers, essentially, it's as if one of the shops wouldn't sell your product and every other shop did. And they did this to try and change the price so that they could make money. And we're trying to see if this is fair or not and what new rules are going to be put in place to react to this.
Yeah, I sent you the link on the private chat, by the way.
Oh, cool. Thank you.
Yeah.
Let's see if this works.
Yeah, hopefully. It's there to illustrate the point, but yeah, we're going to talk about, because there was a big talk about, okay, what is market manipulation, what is not? And regardless of what Wall Street Bets is doing, whether that is collusion, market manipulation, what Robinhood did here is very much so. And we're going to talk about the order book analysis, and we're also going to talk about what he says or doesn't say. And I think, the first minute of this interview, really.
Cool.
This looks like a move by an outfit called Robinhood, which is supposed to be taken from the rich and given to the poor, and doing exactly the opposite. That when the big guys, including one of your main investors in your company, started to lose, you shut down the game to starve the little guy. Fair criticism.
That's not what it is at all. And I know you started this segment. It really resonated with me because you described the story of Robinhood. Robinhood started 5 years ago by pioneering commission-free, no-account minimum mobile investing. And we've been the spokesperson of the individual investor. And our whole goal as an institution is to enable those customers, empower them, and give them access to the markets. Because for the longest time, markets have been only accessible to the wealthy. And so the entire industry adopted our business model in 2019. And in 2020, we added millions of new customers. The entire industry added millions of new customers who took advantage.
Yeah, so I mean, there itself, Robinhood, because of this, became a great case study in terms of the fragility of a brand. When it came to branding, Robinhood very much so destroyed the one idea which it stood for, and that is giving, as the CEO there said, access to the markets, to the everyday, individual investor, and also, well, yeah, as the name suggests, maybe they didn't take from the poor, but they definitely did take from the little guy. And how does this happen specifically, right? So I'm going to put on the screen here essentially what is called an order book. And I'll just share my screen here.
So what you're about to show is, in essence, how the stock market works and how they were able to manipulate that by stopping people from buying the stock on Robinhood. Yeah,
that's right. So essentially, Robinhood's business model, when it comes to protecting the customers, is very much misunderstood, because the people, I think 1.2 million users there on Robinhood, the people who go there and set up the accounts, they are not Robinhood's customers. They are their product. Because what Robinhood does to permit them to allow commission-free trading, because there's no such thing as a free lunch. Sorry. They group these orders and then they sell this order flow to, for example, Citadel, owned by Ken Griffin, that person who partially bailed out Melvin Capital, right? So what they do is that they take these orders, ordered buy and sell orders of the day, they give it to Citadel, and they all execute that at the end of the day. And Robinhood and Citadel can make money from this by obviously the transaction, but at the same time actually front running these orders. They have the data on the orders. They know the trading volume that's going to come in and out and whether that can move the prices. And well, that's, an interesting way of packaging insider information from the get-go, which is what they were doing not so long ago, as written about in The Black Edge. Again, I recommend that book greatly. But nevertheless, yeah, so they give Citadel, Robinhood, for example, gives Citadel an order book or an order flow. And this is what happens. So on the screen on the right, we have an order book. And on the left, we have the buy orders for a specific stock. On the right, we have the sell orders for a specific stock. On the y-axis, we have the trading volume, right? So, for example, for the price to move a bit down to the left, let's say from 0.0314, which we have like right bang in the middle, to 0.03, you would have to sell or buy all of the orders on the buy side here. Right, so however many orders there are times the price at the bid is the amount of money that needs to be put into the market to move the price that way. So what happens with the trading hold is, for example, Robinhood stopped the buying of stocks, and actually the following day or the few days after, they only permitted you to buy 1 or 2 shares. There was still limits on the purchases. It's not like they traded the hold for one day and the next day people came back with, doing whatever the hell they want to. No, it wasn't like that. It was very much still regulated. But essentially what happened is that Robinhood was giving you all of the buy orders and all of the sell orders to the Citadel. And so when GameStop was going up in price, that's because there was a lot more buy orders than there were sell orders, right? The hedge funds had already shorted the shit out of this stock. They had 100%, more than 100% short interest in this actual stock. And how much more could they short? Legitimately, at least. So there wasn't many sell orders. And when you have much more buy than sell orders, the price shoots up. It doesn't take a lot of money to move the price because there's just not many sell orders, right? So you sell all of the orders at complete all of the orders at a certain price level, and it goes up and up and up. So by Robinhood actually canceling the buy transactions without, doing anything to the sell side, they close the tap on the incoming buy orders. So as we can see on the order book here, whereas we have a high density initially of orders at whatever these price levels may be, Robinhood, being the source of a lot of these buy orders, closed them, and no longer were there many buy orders in the order book, and therefore it didn't take much money to push the price down, Because even if we have maybe 1 or 2 or 3 sell orders in the whole entire market for this specific stock, if we have no one willing to buy because they cannot buy, the price is going to plummet until it finds another buy order from someone else in the market, wherever that might be. So what Robinhood did, perhaps on behalf of the hedge funds, is they thinned the order book, right? They made sure not that there was no orders, they made sure that there was no buy orders, right? And to a certain extent, especially with Vlad, the Robinhood CEO, with the fantastic interview that he gave, you might still have a bit of sympathy for that guy, because I wouldn't be surprised if, that day he did get a call from some big hedge fund manager, some big investor. He got the call, he picked up the phone, and someone said to him, if you don't hold your trades right now, you're never going to fucking find a job on Wall Street ever again. And I'm going to make sure of that. Because these people are bleeding money. I think within the first few days, when it came to Melvin and Citron just completely leaking cash at these shorts, they were losing they had lost about $5 billion in positions. Now this is escalated into an even bigger problem, because whoever has exposure in terms of the same exposure that Melvin did, is suffering, right? But that's essentially the order book analysis. That's what Robinhood did. And for them to cry wolf about market manipulation in terms of the short squeeze, I don't know the extent to which the hypocrisy of this specific move doesn't shine in people's faces as a big fucking red flag. Yeah.
So one of the arguments that the hedge funds and market providers have been making is that with such big volumes and prices being so volatile, it's actually putting at risk the companies like Robinhood who allow people to trade in the stock market. And the SEC requires these kinds of traders like Robinhood to have minimum capital requirements for however much stocks or money they lend. They need to have a certain percentage at home. But when the volumes become very big and they don't have enough capital, they might have 1 billion, but by the rules, they might need 4 or 5 billion. Then they're they're not allowed anymore to actually trade. So that's the defense they've been trying to use. And I'll put up a video on that. Oh, actually, we've got a comment from Zach.
Is it on Facebook or?
I see. Right, you can put comments. Yeah. Hi, Zach. So, how do you guys think this whole short squeeze will affect the stock market next week? Well,
yeah, it's an interesting question. We're definitely going to be talking about that at length later on. Right now, yes, yeah. That you're right.
Yeah. So it really depends on what Robinhood does, because you've got this massive group of retail traders who are trying to buy stocks and buy this GameStop stock. But if they're not allowed because they're on the Robinhood platform, then the price is allowed to go down. But if Robinhood or somebody tells Robinhood that they must allow trading to happen again, I think it will shoot up. The other thing to really consider is that, it's not just the retail traders who are betting that the price will rise. Just because one hedge fund is saying that the price is going to go down and they short it, doesn't mean that another hedge fund equally big is betting that the price might rise. So when Robinhood cut off orders and stopped allowing retail traders to buy GameStop, nothing stopped another hedge fund from going in and buying and driving the price higher. So I think it won't just depend on what Robinhood does, but I think definitely have an impact.
Yeah, I think I can chip into that. So really what we're seeing might be happening next week is essentially a reaction from Robinhood, from the hedge funds. They've had the weekend to discuss what's going on, and whatever they do is going to impact the markets. So one thing that can happen is whether by regulators telling Robinhood and other interactive brokers to operate as normal, if they can, like I said, when it comes to the order book, if they be libertarian in terms of not restricting any order flows, the price might shoot up. Because if you look at the Wall Street Bets subreddit, people are still chanting hold, buy more, this, that, and the other. It could cause it to shoot up even more. Something else that might happen actually is the hedge funds might start closing some of their positions, whether that's like a fake, whether they want to start, just kind of cut their losses. What that might happen is that if they start closing their positions, they're going to have to start buying the stocks, and that might cause the price to shoot up. Alternatively, as we're going to discuss about the brokers now, a lot also depends on the reaction of the brokers. Robinhood, interactive brokers, which actually a lot depends on them because orders come through them. So, for example, if Robinhood is able to take on the costs of what is happening in terms of the increasing buying pressure, the price appreciation pressure of, for example, GameStop, if they can take it, if they can take on the costs, again, the price might shoot up. But we can see, as we saw last week, that they can't. They stopped the trading because the more buying that happens on the Robinhood app, they also have to commit to some of their financial requirements, financial liabilities, and so this activity also increases their costs. And if that happens to Robinhood and, for example, other brokers, if they cease to exist, they might have to call for bankruptcy. And if that happens, then you've got a whole lot of market activity across the market, which will just be completely dispersed. I don't know what might happen. But as we saw, I think Friday at the end of last week, people were starting to become scared. Even though these stocks went up in price, like the specific kind of stocks that we're talking about, GameStop, the meme stocks, the market as a whole took a hit. Because there's also a few macro factors at play. You've got the dollar strength. You've got some other problems at hand. But a lot's going to depend on how the brokers react, I think. And that isn't something that we know. There are rumors of Robinhood declaring bankruptcy. There are rumors of, then there's like a bunch of conspiracy theories about what the hedge funds might do. But how is it going to affect the market next week? I think we're only going to find out, tomorrow. Aside from like the theories that we can come up with now, it's very open-ended.
I think that's good. Yeah. By the way, I'll share a link. So if you want to join us, you can just tap the link and come on and ask the question live. I'll put it in the chat. There you go. If you tap that, then we'll be able to add you. Cool. Or if you have any other questions, just put them in, Zach. No problems.
Sure. Do you want to show the investment in interactive brokers video?
Yep. That's
sure.
Exactly. Boom. Okay. Let me just share my screen.
And names like GameStop and AMC. Joining us now in a first on CNBC interview, Interactive Brokers Chairman and Founder Thomas Petterfy. Thomas, thank you for joining us. It's great to have you on a day like today to help clarify what is going on. So explain to us, to our audience, why you have decided, like Robinhood, to restrict trading in shares of these companies like GameStop and AMC.
So simply put, we are worried about the integrity of the marketplace and the clearing system. This is a new scenario in which fundamental values do not matter. Stocks that are worth single-digit dollars go to several $100s. For example, Game today jumped up and down hundreds of dollars at a time. We are concerned about the ability of the market and the clearing systems to withdraw the onslaught of orders to continue to provide liquidity, and we are concerned about the financial viability of intermediaries and the clearing houses. Now, I hope that your audience can follow this. For every option trade, there's a buyer and a seller. There are as many long options as there are short options. So when the stock moves either way, some options make money on one side, and the other side they lose money. The broker stands between these customers and the clearing house. So when some option holders make money, the clearing house has to give us the money to give it to our customers, while other option holder sellers or buyers on the wrong side lose money. We have to collect money from them and give it to the clearing house. If our customers are unable to pay for their losses, we have to put up our own money. Now, luckily enough, we have $9 billion of equity, so we don't have a problem. And we also have a very well automated risk management system, so we haven't really gotten hurt. However, I cannot say the same thing with full confidence about other brokers. I really don't know where they stand, so I'm extremely concerned. As Game moved from $17 to $500, there are roughly 3 million contracts outstanding in the options market. If one of those options is worth, say, an average option I estimate worth about $10,000 now, so that is a loss of roughly $10 to $15 billion on the one side and $10 to $15 billion of gain on the other. I'm afraid that there may be brokers who may not be able to meet these margin calls. So that is the...
So just to be clear, you're worried about the middlemen. Are you doing this move to protect yourself or to protect your customers?
Partly to protect ourselves, but mostly to protect, of course, to protect our customers, but most of all to protect the marketplace, to protect the clearinghouse. So if there are $10 to $15 billion of losses in there, somebody has to pay them. Will they be able to pay it? Is the big question.
Yeah. So I think this is the kind of problem at hand that we're facing now. When it came to, as I mentioned earlier, what is Robinhood and other brokers' reactions going to be from tomorrow? Because what happens here is that, again, from the broker's point of view, you might argue that it doesn't matter who's winning and who's losing, because there's always a side that's winning and there's always a side that's losing. And the side that loses the money, and that money is obviously the gain of the other side. I think the problem with call options in general is the potential exponential factor in terms of the gains and losses that can be made. But what is the problem here is that GameStop has risen so much that the hedge funds have lost a sizable amount of money, obviously, but specifically because of the extent to which the GameStop has rocketed, brokers which have to cover some of the costs because these hedge funds have just gone bankrupt because they've lost the money. That's it. That the players have disappeared. If the broker then has to cover that delta and make sure the gains go to the people who have won, they might not be able to, and that's why they might declare bankruptcy. And essentially, if Robinhood, for example, declares bankruptcy, then all of its clients fail. That's it, because I think that's what they mean when it comes to the integrity of the market, and also specifically like caring about protecting the customers. Because hey, sure, it's all well and good. Like myself, I've got my call option. I don't actually, but for example, I have call options on Robinhood, and those equate to $1 million US, and a bunch of other people have these gains totaling, like I think he said 10 to 15 billion can be the exposure across the industry. Robinhood, for example, doesn't have the money to pay out if the hedge funds just go bust completely, right? To cover their own losses. And that's where the problem becomes, what they would call systemic, because this isn't a problem just faced by Robinhood. It is also a problem faced by other brokers, others which have also traded, halted their trading because they've realized.
Happen next? Should the regulators come in and ask them to have more liquidity? Or I remember one of the things we were discussing yesterday was actually if retail traders are forced to put down a deposit every time they trade, should hedge funds do the same?
Yeah, this is where the debate gets very interesting, and it steps into regulation, because this is no longer only a matter of like, oh yeah, free market, let the losers lose and the gainers gain. This is actually a problem with the asymmetry of regulation applied from these brokers to their clients. And again, these clients can be whoever's got these options. And on both sides, again, the buyers of these call options, they might be essentially the Wall Street bet investors, retail investors across the board, versus on the other side of the trade, you have the institutional hedge funds, for example. And so what happens here usually is that when you want to go into these trades, you have to put down some deposit, you have to meet the margin requirements as a retail investor to make sure that whatever happens in the trade, if someone loses bad, if someone gains a lot, you are still, as a broker, able to meet the requirement of getting the money from the losers to the ones who gain. On the side of the hedge funds, they do not have these requirements imposed. So that when the hedge funds lose bad, and obviously they never lose, but when they have been losing bad now, these brokers don't have the backstop. They don't have the requirements fulfilled. They now have their own financial viability at stake. The whole integrity of the firm is at stake because they haven't applied the same requirements when it comes to margin, when it comes to trading to whatever extent as you have with the retail as they do with hedge funds. And so this is why they stop trading. This is why they committed to trading halt, because they might go bust, they might go bankrupt. That's really what it comes down to, right?
So that's a really good point, and that's something we probably need to explore in the future and try and see what the actual rules or regulations are. But then the question is, and I've forgotten my point. Hang on.
Okay. You said, should the regulators come in and make sure that there's liquidity on both sides of the transaction by the brokers? You said that earlier, but I think I kind of...
Yeah, and then so then that's one argument. But then what the brokers are saying is that, well, all of these retail traders are coming together, they're discussing, and they're making a joint decision to try and drive the price up because they know that that Melvin Capital or another hedge fund has actually bet against this company. So they're trying to put a hedge fund out of business intentionally, and they're making a coordinated effort. According to the hedge funds and according to the markets, that's called collusion. Is that fair?
Yeah. So the debate of the collusion is a tough one because it rests upon you proving the malintent of these individuals, and this is hundreds of thousands, if not millions, of individuals. If you look at Wall Street Bets, for example, before this ordeal started, around the beginning of January, maybe a bit before, they had less than 2 million users on their subreddits, and these were twerps who were just trading call options, put options. They were high risk, high reward investors essentially, and for them it was a game. Now, as of today, there are 7.3 million users there. And it's sizable market power. Again, this is the kind of trading volume that we're talking about. If everyone invests 1,000, I think the average account on Robinhood actually holds just under 300,000 in assets. That's the size of the account. But specifically, when it comes to, as you ask, the idea of collusion, you're entering very muddy waters because, okay, if you can prove to the regulators or to the justice system that these people who initiated this, as you might call a pump and dump scheme, the short squeeze, whatever, if there's communication between them specifically saying trade this stock at this time, push the trading volume up so that there's so many bids at one time that the order book explodes and the price explodes essentially upwards. If you can prove that there is malintent, that there is a genuine collusion by its definition between these people, then yeah, I think you have a shot at doing that. But the problem here is there is a thin line between normal communication and collusion, because a lot of people are targeting the Wall Street Bets subreddit and saying on there people are colluding. That's it. They're coming together. They're saying that we're going to short squeeze the shit out of this GameStop stock and we're going to make money from it. But the problem is when it comes to these social networks, social circles, communication channels, that's been happening since the 80s and the 90s. For example, in Wall Street, you have investment bankers always talking together and in their chats. Even today on the Bloomberg terminal, you can go on it and you have chats with different investment bankers, with different investment finance professionals. This is very much not different than what can occur there, obviously, right? Then you have to prove the malintent. But the idea of a communication channel and the ability to communicate, this is only a good thing when it comes to arguably the integrity of the market. Again, it is only now that technology, internet at large, has allowed these kind of forums to pop up and people, retail investors, to communicate, because these investment bankers and the hedge fund professionals and finance professionals have been doing this on Bloomberg terminal over the past however many years, and they continue to do so, right? And there's not a problem with that until there is malintent proven. But when it comes to Wall Street Bets, yeah, that's what you have to prove if you want to showcase collusion. But just to, for example, have a problem with the subreddit itself or with people talking about these things, no, it's not. Because first of all, to get a financial education, to contact finance professionals and get advice, it's not cheap. It is expensive. And so people have had to resort to their own methods in learning the markets. And that is, for example, grouping up on these forums and talking about it, discussing ideas. Because if you look at Wall Street Bets, there is still due diligence that these people do. Right now, over the past week, you could throw all sorts of slander at this group. But initially, there is a certain level of integrity alongside recklessness, obviously, that you have on a subreddit. But just to justify collusion by the idea of that there is a communication channel and they're a group, that's very problematic, because it's a level of hypocrisy whereby not the same rules are applied to these retail, these people, these individual investors as you have Wall Street, for at large.
Yeah, I mean, I completely agree. And I guess, yeah, and as soon as, if we were to say, well, you have to have this kind of, you're not allowed to speculate, you're only allowed to make a bet on a stock if you've done the fundamental analysis. Well, I or a bank can make any sort of assumption for my fundamental analysis, put some variable in there and change it to become whatever I want. So I really don't think, and you might share this, I really don't think that forcing people to do fundamental analysis and declaring that is a really good way of dealing with it. And then, as you said, people can educate themselves on finance and they can do the research. Everything is on the internet. They can talk, they get informed. Even putting a CFA qualification as a minimum bar for trading stocks, that just then means that the CFA organization becomes a gatekeeper and gets to decide who can and don't trade stocks. And so it's no longer a free market. It's a very regulated and one-sided market.
Yeah, I think it's good to provide these distinctions for people. Like, how does one become a sophisticated investor? What is okay for these retail investors, which is not okay for these institutional investors? Because again, when we talk about like communication and how people bundle together, you've got the same happening on both sides. But with retail, it's only starting to happen now. And although it has been evolving over the past few years, especially when it comes to this subreddit, for example, it's only had a real sizable impact now. When it comes to retail. But again, I think an interesting distinction can be made. What is the difference between the short squeeze that these investors have been doing versus the long squeeze that a hedge fund might have been doing based on fundamental analysis? Because, hey, they shorted over 100% of the public float. Again, I don't know specifically how that works, and I don't think I'm meant to, right? It's not, I don't get it. Okay, it's not the idea that I don't get it. It seems absurd. Right, so when you see that absurdity, you want to bet against that risk that they're taking. But nevertheless, what these hedge funds do, and it has been proven in the past to be market manipulation by some. I don't have a specific example; it's from 2012. But what they do is that again, they short the market. They short, for example, a certain stock. Then they go on CNBC and they go on certain different news websites and say this stock is trash. This is gonna die, and therefore people should sell it as well. Then they publish reports saying that this stock is trash, everyone should sell it, and actually it's worth nothing. And so what happens is that by their own trades, they obviously tank the price, and by their actions, then they also tank the price even more. And so anyone who is long there already, they need to sell to cut their losses, right? And that's how they gain on it. And then they make their money, and then whether or not GameStop becomes the next blockbuster or not, they probably don't really give a shit anymore. But again, that's kind of like the long squeeze inversion of what we have the short squeeze here. At the same time, when it comes to having to do the fundamental analysis, yeah, fundamentals, that's a weird topic, man. Over the past year, that really hasn't mattered without getting too vulgar, it hasn't mattered jack shit in general, because you have the absurd macroeconomic factors of play in terms of, in different countries, you've got currency manipulation, you have low negative interest rates. You have insane monetary policy, which, especially from the eyes of someone who's maybe not so sophisticated, not so educated on economics, how can the Fed, they might say, how can the Fed print trillions and trillions of dollars? My bank account's not going up. This is bullshit. And people get a, weird sense of what is fundamentals and what is not. Just because you work at a hedge fund and have a CFA doesn't mean you're any more right than someone else who just screwed you over in terms of the short squeeze. Again, these are just some hypotheticals. But yeah, when it comes to fundamental analysis, the data is out there. There is access to markets. There is access to other people, and there is communication, right? I can go on Yahoo Finance. I can go on different websites and get data. I can go on different websites and see experts' analysis. I can contact my friends who, have been studying finance. They've been studying economics, and we can start getting to grips. We read our own books from our bookshelf in terms of that, and we educate ourselves. And this is the idea that people maybe haven't yet realized, whether they want to realize it or not, that's really up to them. But especially I think in the US or really across the world over the past year, because of the pandemic, people have lost jobs. They have maybe now start working part-time. When it comes to education, you've got online education. This accumulates time for people, right? This gives you more free time, whether that's in a good sense or a bad sense, whether you're still employed or not. But then you have a generation of people our age where we have seen always low to negative interest rates. And we've always been told saving is not an option. Don't save, invest. Stock market, 8% return year on year, annual. It's been proven. Correction once a year. Business cycle every decade or every 8 years, every 5 years, whatever. It's never the same anyways. And so people come here and essentially you need to ask yourself, like, over the past year, how many people, because of losing jobs or, problems with education or just more free time, how many people genuinely sat down and started educating themselves on finance and improving their financial literacy and been studying the markets and have been reading the books and have been doing the work? And that then becomes a debate. How do you distinguish between an amateur, unsophisticated, and a sophisticated investor, right? Is it someone who's got on a good track record, right? Has been making money? Okay, retail investors have been doing well over the past year and a bit. Retail has been investing in stuff like the airlines, for example. When Warren Buffett sold at the bottom, that's when they started buying in. Like if you have been following Wall Street Bets, these people were just buying this stuff because they thought it was cheap, because they did their own version of fundamental analysis and suggested that if we just hodl, it's going to work because airlines aren't going to go out of business. Maybe some will, maybe some won't. That's besides the point. They did their own work. They bought into that. Airlines have been doing very well. I'm pretty sure they've been outperforming the market. Tesla, Bitcoin. I mean, yeah, especially in Bitcoin. Yeah, there is no fundamentals in Bitcoin. But nevertheless, okay, they've got that track record. Only it's a year. Again, this doesn't justify whatever they're doing now. But they've been making money. That's the point. Does a seasoned investor have to go through business cycles? 1 or 2 business cycle. Never is business cycle the same. Do they have to complete a CFA? What fucking use is that? I don't know. Do they have to go through an economics or finance degree? Again, if you ask a lot of people after these degrees, it's not something that leaves you predisposed to being successful in the markets. So if you want to define what is the definition, what is the difference between a sophisticated and unsophisticated investor, by all means, go ahead. But to try and play around these definitions now and thereby barring some people from entering the market because they're screwing you over, too bad. I don't get it. It's not a viable excuse to do that now. Again, people want to bring more regulation and try and ban people from trading and investing because they're unsophisticated, even though they fucked you out of $5 billion US. I don't know. It's a problem. I think it's important to, instead of regulate, actually educate. Right? It's something that we spoke about yesterday, and people have been clearly have been doing quite good at that. And now Wall Street Bets, over 7 million users. The amount of due diligence and posts and information about inflation, about monetary policy, about a lot of stuff there. A lot of information is there, and now people have access to it. And what's going to happen now? It's whatever regulation they want to impose on these people, it's not going to prevent the actual trend from occurring in terms of people having more access to data because of the internet, more access to communication of other people because of the internet. You no longer need the Bloomberg terminal to have access to a lot of data and to have access to a lot of people of similar minds in terms of in the finance community. So I don't remember what question we initially started off at, but that's that.
I think we covered a lot of topics.
Yeah.
And I completely agree on the education side. It reminds me of social media and politics. Because you say that democracy is imperfect, it doesn't really work, because then people can be manipulated on social media. They can make thought bubbles. They can be persuaded to certain things that are not necessarily true. But then you ask yourself, well, what's the alternative, and how can you make it better? Because as soon as you put rules in, it's not like you can decide who people should vote, because then it's not a democracy anymore. And the only real solution, which is a really hard solution, is culture change. So educating people, showing them how this information so they can recognize it, working in schools, showing them perspectives, getting communities to reach across and talk to each other. And that's something very organic that happens over time. And it's not like you can make a rule that makes it happen. And so the same thing that's happened on social media with politics, I think, is happening with Robinhood, Wall Street Bets, and financial markets. And yeah, so I think as a society, we're seeing a really comprehensive shift to these are the effects of democratizing all of these tools that once used to be very limited. If once politics was restricted to an elite and finance was restricted to an elite of bankers, now if you have a lot of people involved, well, people are people and they're going to act like people. And so then you get Wall Street Bets, which is full of memes and it's full of fun. And then they do these things because they're annoyed and angry.
It's I think what we can also add on to that is then the actual flip side, because we've been talking about our own opinions and how we see things, but actually from a conversation that we had yesterday with another person, he gave us another opinion, actually, another outlook on how this might turn out, like what actually happens next. Like, okay, people have access to data, information, frictionless market access, thanks to Robinhood, and thanks to their other, pioneering of this entire kind of financial market access business, which they have profited from for so long. Now it's coming to bite them back in the ass, because actually it's, these retail investors aren't as stupid as they once thought they were, right? But anyways, the point here is that, okay, you've got all of this frictionless access to just about anything, data, communication, and markets, specifically markets. That leaves a lot of danger to people not predisposed to financial education literacy, right? Because still, if you, for example, linking back to collusion, if you want to accuse these people of collusion, you're going to have a hard time when a lot of people on these Wall Street Bet subreddit and in personal conversations, they buy these stocks or options for the sake of sticking up to the elites. But they themselves are very, very vocal in the idea that they're not actually aware of what's going on. They don't have a clue what they're doing. Like if you were going to ask, what is a short squeeze? Are you, taking part of a short squeeze? Some of them might be like, what the hell is that? Aside from the actual headlines that they've seen, they might be quite ironically clueless as to what they're doing, even though they're still part of something bigger. So,
for the meme.
Yeah, exactly. For a lot of people, it's just a meme, right? They don't care if they lose the money, which is weird, but that's the absurdity of what, the kind of financial world that we've been raised up in. If you're like 20s, if you're 18, 19, 20, 22, you've been in a very interesting time of finance. But nevertheless, when it comes to the short squeeze, by all means, people who sell at the rally and people who get out early are going to make a fuckload of money, and they're going to be very happy. But the people who stick through it and hodl and hodl and hodl, I think they're going to be the ones to lose. And those are the people that are genuinely clueless, right? So there's going to be losers and winners, but it's not going to be hedge funds versus retail. It's going to be a mix in between. Because again, it's not like Wall Street Bets have been the only people pushing up the GameStop price, stock price, and they haven't been the only ones buying that. I'm sure there's been some institutional investors who have also kind of hopped on the trend and make some decent money. But at the same time, I don't believe that for a second that the Wall Street Bets community can just pump the price, sell, and live happily ever after. That is not going to be the case. I wouldn't assume so.
I was thinking, as you said, there's going to be some winners within the Wall Street Bets community, and then other people who just did it for the meme. And when the prices drop and they hold the line, as they say, they're going to end up losing a lot of money because maybe they bought when the price was high. And so I think what we're going to see is a kind of sorry, my screen is going dark. What we're going to see is that within the Wall Street Bets community, you're going to have all the promoters and all the popular people who at the moment are saying, buy, hold the line. And those are going to be the people who sell first, along with some others. And then the majority of them are actually going to lose a ton of money. So then you're going to start to see an elite Wall Street Bets community who are like the promoters, and just the masses of Wall Street Bets who bought into that. So they're going to have internal friction. And I really think that the hedge funds and whoever else could post on these forums, much like an actor could post on Twitter and try to manipulate people's minds to try and create infighting. And so I think that would be something interesting to see that unfolds.
Yeah, that's a super interesting point when it comes to like the Wall Street Bets elites. Because the fact is, a lot of these people on the subreddit, especially part of like the initial 2 million before this big jump, they were smart people and they knew how to fuck other people over to make money. At the end of the day, these guys want to make money. Everyone else who hopped on the trend, ironically, you're going to see a split within that, because it's the same mechanic between Wall Street and Main Street, right? Or like these retail investors. And now you're seeing a chunk of these retail actually, again, like I said, over the past year, they educated themselves. They worked their thing. They needed to find a source of income. Whatever their reason, free time, passion, memes, they've made the money and they've got the smarts to make more money. And again, even that, just to kind of encapsulate that, that is the same mechanic which we initially saw between the people who had the Bloomberg terminals, high-rise offices, and the rest, and now between people who have a fucking computer and a home office and this, that, and the other, and again, are smart enough to cash in on this opportunity. But actually, I think, no, that's it. I was also going to talk about a different point in terms of like the 07, 08 resentment, which people have been talking about in the Wall Street Bets community, and how, again, not only, that's what I was going to say. My point in terms of like the educating yourself throughout the pandemic, because you've got the time, you don't have the money, and then you need to do something with your time, something that makes you money. In that case, it could be options investing. A lot of people in the Wall Street Bets community have been citing the 07, 08 Great Financial Crisis resentment that they have to stick it up to the people. So not only have people have been potentially educating and, kind of being in the market since the past year, for some, this could have been like a 12-year journey, a long time. So, but now it's only getting kind of caught up in the process in terms of we're really seeing the results. Because regulation is going to follow slowly, as it always does. Until then, you're going to have a lot of opportunities like this, I think, but maybe none the size of GameStop, because this was a complete shock, I think, to, even some of the people from Wall Street that have invested, it's been a complete shock to them. But it's that.
Yeah, but do you think the regulator is going to step in and try and control or limit this kind of populist? Because, essentially what's happened on Wall Street Bets, it is very populist. You've had some people who came in early, they've propagated an idea, and then it became like a movement with a mission and a goal, which is to stand up to Wall Street, which is to stand up to the hedge funds. Now, whether that's the real intent or not, I think the real intent is actually just to make money and already to stand up. But, that's the narrative they've painted. And I'm not sure that, I think a lot of people are going to get burnt, they're going to lose money, but I think that's part of the process, and I don't think it's good. I think it's actually quite bad that these people lose a lot of money. But I think they've got very excited to buy this hype train, and I think that they're going to make a lot of money. At least they hope they're going to make a lot of money, and they're part of this community, which gives them some sort of identity. It's very much like politics. And then at the end of it, they're going to have lost a lot of money, and they're going to step outside. I don't think it's going to continue as much. It's going to get less and less. That's my prediction, at least.
Yeah, we'll see. We'll see for sure, because the problem with what we're seeing now is that a lot of people are going to get burned, like you said. And a lot of people are playing with their stimmies, as they call it, like the stimulus checks and that. So there's going to be a lot of people losing $500, $600, $1,000, whilst a very few make the millions that we've seen in gains on Wall Street Bets. And whereas those are the posts that are going to become popular on Wall Street Bets, you won't see all of the people sad. You won't see, or at least people won't even admit their sadness and the resentment for the idiocy that they've involved themselves in if they're the ones who lose, because for them, it was about the message. It was about the cause. And these kind of fictions and ideas, it's like a fucking religion, actually. If these fictions and ideas that people get themselves involved in, thereby justify the losses of the $600 and $1,000 for them. But they're the ones who inevitably have been screwed over. And again, it's not nice losing money. It's not nice. It's going to cause problems for sure. It's going to be the same people that lose, that have been losing, that are going to lose. Aside from the Wall Street Bets elite, that was actually a funny point. And funny but sad, because it probably is true. But nevertheless, what is that? Yeah, it's going to be very problematic in terms of how that's going to unfold, because people are going to lose, some people are going to gain. But the gains are, as always, going to be just as vocal as the rest, if not more. And it's what you're going to see.
Yeah, that's right. Because at the end of the day, on these forums, you only see one or two. I haven't properly scrolled through them, but if you think about how many millions of people invested in GameStop, or bought GameStop more than invested, and then how many people have actually posted gains and they're going to actually cash out, I don't think it's that many. And it take a second for another hedge fund or for a big player in the market to just sell, and then drive the price down. And all these people are going to be left with stocks in their hand that was way overvalued. So, I think it's going to be a lot of losers, which is not good.
But then you get into the debate of, is that meant to happen or not? Again, if you're a free marketeer, that is how people learn, right? The only reason, for example, myself or other people the only reason investors are successful is because they weren't successful in the start, like consistently successful, like you want to hone your strategy, this, that, and the other. And following a meme and following a cause and eat the rich, that is not a strategy which is going to make you money in investing. And people are going to hop onto that. But again, then when you look at the SEC with their announcement, we're going to protect the retail investors. Okay, just the same way they did in 07, 08. That's bullshit. You don't want to listen to that. How do you protect the retail? You don't protect by regulating. You don't protect by constricting them, right? You want to enforce the laws that are on the book and increase education, because that's when people are going to be realizing, like myself and you, I don't think we're involved. Okay, personally, I'm not involved in GME. Like there's no money that I've put into it. We're smart enough to understand what's going on and laugh at the memes, but at the same time, we understand that this isn't necessarily how we make money. Sure, we can make the quick buck here. Like, I'm not saying that if I didn't invest the other day, I wouldn't have made any money, but it's just more of like a long-term approach. But at the same time, it's tough to regulate this, because you either in these markets, you either have the free market or you don't, right? And if you believe that people best learn and money, resources best get distributed through the free market in terms of people risking to gain a benefit or suffer the consequences, or whether you try and regulate the funnel of sophisticated only investors a club, however that's going to work out, I don't know. We'll see. But for the SEC or others to come out with regulations on the retail side, that's going to be very unlikely, I believe. But we do have a Joe Biden administration. I don't know how that's going to play into the politics of all of this. But he's been swinging executive orders like crazy. I don't know how we can influence financial markets activity with that. But nevertheless, I've actually, probably as long as the hedge funds don't suffer much, we won't see much of a change in terms of retail. Again, people lost the stimulus checks, or people might lose the stimulus checks that they were given. Some people might gain a lot of money, but it's not the kind of underdog euphoria, underdog utopia that we see represented by Wall Street bets. That's not going to be the reality and how things turn out, I don't think.
Yeah, I completely agree, and I think that's a really good prediction. Unless there was any other topics you wanted to do, I think that's a good note to finish it on.
We could actually throw out some ideas for what might happen next week, because I did think of like a few theories. This is only like 5 minutes of just ideas. But I think one thing that could happen, I was just actually no. First, I'll show the tweet. When it comes to like the this Ross guy, which I'll share on my screen right now. Because obviously, for whatever reason, in the 21st century, in 2021, we get news quicker through Twitter than we do through actual news sites. Now, I don't know if you can call this news. This is, I'm pretty sure, conspiracy or gossip more so, but that's kind of what our society runs on. And then that's essentially, Ross says that Robinhood is basically not letting people trade anymore, right? We covered that. This is the precursor to a potential bankruptcy filing on Monday morning. They'll be calling their venture capitalist backers for billions more this weekend. And when they say no, he should say if they say no, this is like long-term capital management. So this point essentially resonates. Stop sharing. This essentially radiates the idea that, again, as we spoke about before, brokers have got their own finances, or the whole companies are at stake potentially if they don't get more money, more equity. Like we saw the Interactive Brokers guys saying they have $5 billion in equity. They also have risk management systems in place. So, as per his words, they're okay. But Robinhood and other smaller brokers, more innovative, pioneering, essentially high margin, low cost, whatever brokers, they might get screwed over in terms of actually going bankrupt if they can't secure more funding, or if they just keep holding the trade, which loses the money. But I don't know if the latter is much of an option. So, for example, we have two scenarios. Robinhood goes bankrupt and Robinhood doesn't go bankrupt. If Robinhood goes bankrupt, you could see, I wouldn't say market crash, but it's the idea of completely market flow, order flow, and also people's accounts disappearing somehow. I don't know how this kind of bankruptcy actually works with brokers, but you have a collapse of one of the major brokers, 1.2 million users, a lot of order flow, obviously. So that could definitely cause a big problem with some of the stocks that we're seeing, specifically GameStop and the kind of price appreciation which we saw up until this point. If they don't go bankrupt and they have secured equity, then they either continue to hold the buys of these stocks or they don't. If they continue to hold these, well, the price is going to go down because of the order book analysis. If they don't, we could see a price pop off if Wall Street Bets is still adamant in continuing the rally, continuing the short squeeze, whatever. What I was also thinking about a scenario that might happen is the hedge funds could potentially, if this is if they're getting completely screwed over by what's happening, if they need to exit their positions as soon as possible, they don't want to lose any more money. What they could do is maybe like a faint submission into the short squeeze, allowing the price to pop off, let's say to like 800 or 1,000. People start being like, yes, we won, sound the alarm, we're selling, we've won it. And by that, obviously, kind of get rid of the problem which the Wall Street bettors are posing to them. That could be a feint. We could see a pop off in the price before that eventually falling alongside the rest of the stock market, as we saw in the last week. Or if all is left to his own devices, we could see a further rally, not by any feint or short squeeze, but just by people buying more and more and more. Maybe from other brokers, right? Whatever happens to Robinhood, that might happen, in terms of their side, but maybe this weekend has seen people switch their accounts or enter the market, but not on Robinhood's platform. But I mean, those are just a few ideas.
Because the more the price goes up, the less willing these people are going to be willing to hold the line. Because if I'm standing to make 200% profit, I'm probably going to decide I'm going to take profit. I'm not going to follow what the registers say. As long as I make 10-20% profit, I don't really care too much, because maybe that's £100, £200. But if I'm standing to make a few thousand, tens of thousands, I'm going to think twice about holding the line and following the meme. And so as soon as the people break ranks, it's just going to collapse and the movement just dies.
Yeah, I think if the week continued as it did, we might have seen more of a rally. But what this weekend has done is caused a delay. And for a lot of people, they're sitting at home 2 days in silence. In terms of market silence, there's a delay, that there's no more emotions. You're no longer hyped up like, holy shit, revolution, finance revolution, let's go. No, you've been sitting at home. You've slept twice. You've slept. You've gone through this weekend. You've been sleeping. You've been making coffee, whatever. And you're thinking, okay, I'm not riding on my emotions anymore. This delay has caused me to think, actually, I might exit. And we'll see. But whatever is going to happen next week from tomorrow, Monday, it's going to be very sudden. It's going to be intense, and it will probably be unexpected. Whatever these ideas we've come up with will probably be none of them. Who knows? Who knows what these hedge funds are going through? They're probably, given that Citadel, for example, and other hedge funds, that obviously other hedge funds will have access to these order books of these Robinhooders. They can inspect the data, the accounts, their orders. They know the data. They know that they've been making a plan this weekend to go ahead with whatever it is they're going to go ahead on Monday. We're only here to watch.
That's right. Yeah. Let's see what happens. Thanks. I think this was a super good session. I think we should definitely do more. Maybe make a bit more spontaneous. I think we'll just write some questions down next time and just go from there. Put some memes up. Yeah. I know there's 2 people watching, so if you have any questions, do post them, or if you're gonna join the discussion. Cool. Thank you very much, everybody, for watching. We're gonna sign off. If you have any ideas for topics or things you want to discuss or be part of the groups, what we normally do is on a Saturday we meet up privately on a Zoom call, and we have our discussions just to bring out some ideas, and then we present them and discuss them on a Sunday, because that means some people don't want to be recorded. But if you want to jump on both or just one of the two, just let us know right on our Facebook page or YouTube. We're really open to this. Cool. Awesome. Thank you very much, everybody. See you later. Ciao, ciao.
Awesome. See you.